Good morning, everyone. Welcome to our live daily market outlook. We are at the first day of the week, 20th of August 2012. Not much seen from last Friday's closing in the most instruments. However, dollar is coming under pressure at the beginning of the new week, but still the major instruments are such as single currency remain in a sort of range and directionless in the short term action that we will see in our more detailed look we'll see on our technical part. From the other side, the oil is enjoying a good support due to already known reasons: the crisis in the Middle East and the Gulf area, and also what we mentioned on the our last session on Friday, that Americans were thinking of releasing their strategic oil reserves. Finally, it seems that they changed their mind and they sidelined these plans that already gave results, and they're pushing the oil October. Oil contract is trending higher with the Brent oil moving to levels around $114 per barrel, with the October US sweet crude oil moving currently around 96.60. This is also being supported by still existing disruption in the North Sea that is expected shortly to be resolved. From other commodities, gold is still holding above 1600, and some positive tone seen in the near-term outlook. But as mentioned in our previous sessions, some important upside barriers between $1620 and $1640 per ounce are still acting as a good barrier in keeping the price capped, with the current price action of yellow metals still seen within range. Not much from today's calendar, as usually Monday's day that does have many releases, and most of the movements will be based on the news and the technicals. So just not to waste our time further, we're going to move to the technical part and see instruments one by one. Of course, at the end of the session, you can submit your questions, and we will answer if there is any instrument that we have missed, or you have any other request. I will be glad to answer to you. As always, starting with the euro. At the beginning of the day, overnight movements were a bit at the back foot after opening at 123.50 and easing down to 123.20, with the beginning of the Europe seeing some positive tone as the pair heads towards our initial barriers at 123.80 and 124.00. As shown on the 4-hour chart, the pair is basically entrenched within 122.50, 40.50 and 123.80, 124 range in the past 1 week, unable to break higher, with a rather neutral tone seen on the 4-hour chart studies. 1 hour is now improving as the pair, as the price heads higher, with the break above initial and strong barrier actually at 123.80 and 124.00, required to open way towards a key barrier on the short term at 124.41, double top of 6th and 7th of August 2012. That will open way for a stronger corrective action of 120.42, low of 24th of July 2012, above which comes Fibonacci level 61.8% at 124.74. Important was a break above the bear trend line of 132.82 through 124.41. That stands around 124.40. As the pair initially tried to break without success, we see the move from last Friday rally to 123.80, and then immediate reversal down to 122.88. Now this morning's action is again above, with the clearance of 123.80 minimum required to confirm this positive tone. Immediate supports are now as 123.20. That was the overnight's low. posted during the Asian session, and more significant is last Friday's low at 122.88. Between these, we have 123 as a intermediary support and the psychological round figure support. Basically, any dip below 122.88 would be risky at this point. However, as the pair is currently heading higher, more focus is seen towards the upside. But again, we need to keep an eye on 123.80, 124. Any possible rejection at this point would be signal again for the further range, with a loss of 123.00, 122.80 seen as a risk and a trigger for possible further easing and revisit of the range floors at 122.50 and 122.40. And approximately similar situation with the sterling, as it is still entrenched within a range that's better shown on the daily chart, but upside attempts towards very strong barrier zone above 157 that marks 200 days moving average at 157.15 currently, 90 days moving average on daily chart at 157.31. And the 157.66, 76 range tops range of from the 20th of June 2012 that keeps the upside limited. Basically, the 200 days moving average limits the upside action in past 2 months. The hourly action is now improving as study started, indicator started to point higher, and the pair regains 157 barrier following last Friday's rejection at 157.43 that found good support at 156.70. That also marks the 4-hour chart 55 days exponential moving average that is now offering good support for possible further extension higher. Further down, the 156.60 is the short-term bull trend line drawn of 154.89, 2nd of August low through 155.76, 10th of August low, and basically loss of 156.70-60 zone would be risky, as close to this is 38.2% retracement of the move from 154.89 to 157.43. Would be risky for the near-term action, as it will as it could be triggered for a deeper reversal and a stronger correction of the rally. On the upside, as the positive tone that is developing now on the hourly chart sees potential, but a break above minimum 157.15 that marks the 200 days moving average that has been touched so far once, 57.27 last Friday's intraday low, intraday high, and the peak of 157.43 is required to resume. As shown on the daily chart, the studies are improving at this point, as two brief breaks above 200 days moving average as initial barrier see potential for further extension. However, break above the range, a clear break above the range top is required to establish a fresh direction of the pair and open way towards 158.00 as the initial barrier and around the figure resistance. The dollar yen continues its a strong rally of 78 support zone with 79.65 seen so far. This is the high of the day posted during the Asian session. Overextended the conditions on the 4-hour chart see potential, as the signal has already been developed for a stronger for the corrective action, with the 179.40 seen so far ahead of initial Fibonacci support at 79.30, 23.6 close to this is 220 days moving average. On the hourly chart, the studies are already pointing, indicators are already pointing lower. That could be a good signal for a corrective action, with the 79, 78, 90 zone seen as ideal level to contain dips. We have the 38.2% retracement at 79.08, and the 78.90 is the 50% retracement, reinforced by ascending 55 days exponential moving average at currently at 78.87, and any stronger reversal should ideally ideally find a ground at or above these levels in order to maintain the current positive structure, as the focus still remains at the upside, with the 80.00 seen as our next upside target around figure resistance and psychological barrier, and break of which to open next more significant, also significant barrier at 80.61, peak of 25th of June 2012. As said, ideal reversals should be seen between 78.90 79 zone at or above these levels. Otherwise, loss of 78.90 would turn near-term outlook into more risk, and look for further corrective action that will immediately delay the short-term bulls that are established from 78 base and so far reached 79.65. The dollar Swiss is at the back foot at the beginning of the day, following last Friday's strong rally and upside rejection at 97.71, well below our initial barrier at 98.00, break of which was required to resume the near-term recovery of 96.55, double bottom of 6th and 7th of August 2012, as a fresh weakness has been developed at the beginning of the European session. More focus seen down more focus is seen towards the downside supports and the near-term range floor at 97.00. Level important, as it so far held the downside contained during the past couple of days, loss of which is to turn immediate focus down towards the key short-term support at 96.55, double bottom. That will be a signal. This also marks a 61.8% retracement of the up leg from 94.61 to 99.70, loss of which would be signal of the fresh leg of the corrective action of the broader uptrend of dollar Swiss from 90.41, let's say. The latest big move started at the beginning of May 2012. So at this point, main risk is seen, the downside remains vulnerable, and the main risk seen at 97.00 and 96.55, while any upside action needs to see a clear break above 98.00, 98.10. That also marks 50% retracement of the corrective action from 99.70 to 96.55 to avert immediate downside risk and turn the short-term focus higher. And a quick look at crude oil. As said, Americans' decision to sideline their idea of releasing strategic oil reserves pushed the oil, was the trigger actually to push the oil price higher, with the October contract that is currently front month. A reminder that September contract is expiring today, hitting 96.81 so far, and approaching our immediate target at 96.79, the 200 days moving average. Recall we mentioned this on the last Friday's session, that break above 94.69 and the break above 96.00 is set to open 96.79. That is 200 days moving average, with the positive node now dominating on the daily chart as a part of the strong recovery of 77.27.54, double bottom of end of June 2012, with the latest break above 95 at 28.61.8% retracement of the broader 106.41 to 77.27, and now seeing the latest obstacle at 96.79, the 200 days moving average, towards psychological and very important $100 per barrel level. Quite extended conditions, and the RSI now approaching the overbought zone might be a signal for some corrective action. Yet we don't have any firm signal. This is just a hint, but it's would be the likely scenario, as the oil price is now hitting a very important 200 days moving average barrier, and some corrective action is not ruled out at this point. Also, the hourly conditions are quite extended. RSI already in the overbought zone and started to point lower. That could be a good signal for corrective action. 96 now offers initial support ahead of a more significant 95, 60, 95, 30 level, where is the 55 days moving average, and the last Friday's lows. That would be quite good support, and any stronger reversal should ideally reverse here. However, further easing is not ruled out. Now we'll see also that much depends on the fundamentals that are currently, fundamentals and news that are currently quite supportive for the oil price, especially due to the oil shortage production in the North Sea, and of course deepening crisis in the Middle East and the Gulf region. And a quick look to the yellow metal. As said, that the introduction is still the upside is still quite well protected. The 16, 20, 30, 40 zone actually is as descending trend line, currently at 16.24, offers initial resistance, although the 4-hour outlook is still maintaining positive elements, as studies are in the positive territory and seeing potential of revisiting this important resistance zone. Daily structure is I would say at this point more sidelined, and we need to see the break above 16 2030 zone as initial barrier, reinforced by 38.2% retracement to open next barrier 1633 and 1640, a break above which is to confirm the corrective action and avert immediate downside risk, as the yellow metal remains in the downtrend since September 2011 from its record high of $1,920 per ounce, with the critical support zone at 15, 20, 30 area is still holding the downside, but failure to clear our initial barriers at 16, 20, 40 zone still keeps the possibilities and the risk of a possible revisiting of these levels, with the 1600 level seen as a trigger and a key support at this point. That was all from our side. If you have any questions, please, you can submit them now. Thank you. Okay, the Aussie dollar. I was to be honest expecting this. The Aussie dollar, yeah, remains in the back foot, on the back foot from its recent peak at 106.11, posted on 9th of August, especially after losing important 105 support, and dipping so far to 104.10, just above 50% retracement of the latest up leg from 101.75 to 106.11. Quite a negative tone seen on the 4-hour chart, while hourly studies are now, hourly indicators are pointing higher, though still in the negative territory. At this point, 104.70, 60-70 zone, the previous lows and the 55 days exponential moving average are acting as initial barrier, and basically if we don't see the break above minimum this level ahead of 105 and 105.30, then more risk would be seen towards the downside. Break above 104.60, 70 to open 105 and 105 27 to allow for some stronger recovery, with the 105 also being reinforced by descending trend line of 106.11 top. As for our studies remain in the negative territory, and the price is still holding below 20 days moving average, that reinforces the previously mentioned barrier at 104.70. I would say more potential is seen, still seen towards the downside, as long as let's say 105 stays intact. More pressure seen towards the downside. 103.93 is the 50% retracement ahead of another static minor support at 103.83, and 103.40 is the 61.8% retracement that would come in focus in case of a loss of 103. What did we say? 104.00 and 103.80 zone. Just to resume, the more focused in towards the downside, as long as 105 stays intact. Any further question, please? Okay, no questions for today. Okay, beginning of the week, we're gonna get more into the matter during the week, as we expect some more action after warming up on the Monday, first day of the week. I would like to thank you all for being with us, and expect you again tomorrow morning at the same time, our standard time, 7 o'clock GMT, 10 o'clock local Cyprus time, when we will come with the latest news, analysis, and comments. For all those that missed any part, you can find this session shortly uploaded in the YouTube. Our page is called the Windsor Brokers Forex. Until tomorrow, I wish you a nice day and very successful and profitable trading. Good luck.